Good afternoon, good morning, everybody. This is Graham Goble at Bank BI. Thank you very much for joining us today. Today we're going to be focusing on the Bank BI solution and how we can help with automating financial processes for credit unions. A little bit of housekeeping, as you'd expect. You'll be on mute during the presentation. If you do have a question you'd like to raise during the presentation, please put your hand up or put it into the Q&A, and I'll leave a little bit of time at the end of the presentation to go through any of those questions. Today's presentation is going to be a mixture of a few PowerPoint slides and then jumping in to a demonstration. So thank you very much for joining us today. Let's start with some offers. As a promotional offer for joining this webinar today, we are offering any credit unions that subsequently sign up to the Bank BI solution, we're offering a 15% discount on the subscription. So thank you very much for joining today. And as I say, if your interest does follow through into taking up the Bank BI solution, then we will certainly be pleased to offer you that discount. The other offer we have today, such a continuous offer we have to credit unions, is free use of our peer analysis software. So we do take the NCUA quarterly call report data into our application. We do make this solution available, and I will give a little bit of a demonstration towards the end of the presentation today. And if you are interested in that solution, I can give you the details of how you can register and sign up. As I said, it's completely free of charge to credit unions, no obligation, no contract. And you'll find data about your credit union and all other credit unions in the United States. And along with full interactive analysis, you'll be able to get hard copy PDF report like the one I'm showing here on the screen, with a full analysis that you can download from within the application. So let's get started then and move into talking about the Bank BI solution. So Bank BI is a cloud-based solution. We host it in Microsoft Azure. You can see it over there on the right-hand side of the screen. It runs on any device, a phone, a tablet, or the desktop, as a browser-based application. You don't need to install any software on your device. You access it in Microsoft Azure. The system is hosted by us as Bank BI. And in the United States, this is hosted in the Microsoft Azure data center in South Central, which is San Antonio, Texas. And in our application, we specialize on doing two things. We bring in the general ledger data from your core accounting system, and that general ledger data allows us to light up what we call our financial performance application. As well as taking in an overnight snapshot of financial general ledger data, we also take in a complete snapshot of all outstanding loans and deposits and some non-PII member information from your core banking system. So these two data sets light up the financial reporting, where we can do everything from balance sheet, income statement, financial reports, through to generation of automatic board reports, and our banking performance application, which gives us a deeper insight into loan and deposit analytics, tracking new loan production day by day, by branch, by product, by member segment, by loan officer, relationship manager. We have integration to most core systems. We do not connect directly to cores. We look for direct or extracts from those cores. And with many of the popular core vendors, we already have Bank BI extracts available for integration into those core systems. The data is pushed to us through secure communication. We provide all of the software to push those extract files into our cloud-based application. And this allows credit unions to achieve a seamless overnight integration of their data to our application. This allows you to access data first thing in the morning. You could open up the Bank BI system and you'd be seeing not only the financials, but a complete analysis of your loan and deposit position as at the close of business the previous night, fully updated with month-to-date information. So the Bank BI solution is really tackling financial performance analytics, and we start with our foundational applications, as I've just described, in terms of financial performance and banking performance. And these two applications deliver significant value propositions. Firstly, we can monitor the financials on a daily basis. So if you're monitoring, for example, deposits now on a daily basis, tracking deposit changes across the balance sheet, and you want to see that day by day, month by month, then the Bank BI system gives you an instant way of monitoring that. We can, as I said, automate things like board reporting, which gives you the opportunity to increase or improve the look and the feel of those board reports. A lot of positive feedback about our board reports from non-financial board members, maybe they're non-employee volunteer board members. A lot of good feedback in terms of the readability of our board reports. And the ability to obviously generate management and board reports instantly once you close your financials means that you can report faster. You spend less time moving data into Excel spreadsheets. So you gain efficiencies via this automation, and eliminating Excel from the process can also obviously mean less errors creeping into that process. In the banking performance area, as I said, daily loan and deposit analytics, we can look at that from a new loan production, new deposits. We can look at that from a loan quality, whether that's by credit score or by past due days analysis. We can also use the application to generate what we call opportunity lists. So this could be lists of members that you're looking to retain, maybe deposits, term deposits about to mature, or loans that are about to mature. This could give you opportunity lists for campaigns to those members. And it also allows us to move the data set that we've created and stored here into a branch lending and risk and operations perspective. So we land very much in finance. We look to get the financials right. We reconcile the data from the loan and deposits coming out of the core banking system. We can take ancillary data feeds from other systems if not all the loan balances are in the core banking system. So if you have credit card balances or other mortgages or student loans or any other type of loan product outside of the core, we can bring those in as a separate data source into our process to consolidate it. And this allows us then to move the reporting around to the rest of the organization. So we can start in finance, satisfy the needs of finance, CEO and the board, and then maybe take a more product member centric view of the data as we move into operations, risk, lending and branch management. This year, we're also bringing out 2 new modules. We're bringing out Profit Analyzer, which is a member profitability solution. So here we're applying funds transfer pricing rates and a concept to members' accounts. And this allows us to calculate a net interest margin for both loans and deposits. So for loans, we apply a cost of funds based on cost of funds rates you can supply into the system. And the difference between that cost of funds rate and the gross interest that the member is paying on the loan would give you an interest margin. Similarly on deposits, those deposits have a worth of funds internally. So we can pay the member appropriate rate on the deposit or the savings account, but internally we can then sell that for a higher interest margin, and thus we can derive an interest margin on deposits and give that value to those deposits. We can roll that up by branch, by member segment, and by member. So that Profit Analyzer I'll go through a little bit later as well. We're also this year introducing our own planning, budgeting and forecasting application. In our financial performance solution, we can take budgets and you can upload them through a fairly simple Excel template. Those budgets feed into our financial reporting and allow us to do financial performance variance analysis at the at the balance sheet and the income statement level. In the planning, budgeting and forecasting application, that's where we can actually create budgets based on the existing contracts that are on our balance sheet already. So the examples of loans, we play those loans forward in effect, calculate the declining principal balance with principal repayments and interest income, and then we allow you to capture through a series of budget drivers new business assumptions. So how many new loans of a particular type you're going to disperse in a given month at what rates, and that then lays on top of those existing contracts, calculating out the balance, the interest and the cash flow in that process. So through a series of drivers, which I'll again show a little bit about later in this presentation, you can run a complete planning, budgeting and forecasting scenario within our application. So one of the real benefits here is not only making the annual budget cycle much more agile, fully integrated with the reporting, completely connected to the chart of accounts that's coming out of your core accounting system, but we also can place credit unions into a continuous forecasting position. This means you can copy the budget, you can roll the actuals into that new forecast on a continuous basis. And as you progress through the financial year, you can then reforecast based on changing interest rates, changing business scenarios, changing product pricing, and you can therefore create a separate forecast or recast based on the latest position in the financial year. This means that the original budget is still held, stored, and unchanged, and you can still report against that. But it also allows us to give us the flexibility to look at, what if rate changes or reforecast based on business changes. So Bank BI very much involved in providing additional functionality in the Office of Finance that can benefit the whole credit union. And the Profit Analyzer, as I said, allows us to apply the FTP to give us an alternative view of branch and product and member profitability. You still, of course, have your accounting and your gross accounting at the consolidated credit union level, and you can still obviously see those balance sheets and income statements at that gross level by branch. But what this module will allow you to do is to take a different view of profitability based on applying that funds transfer pricing methodology that I described. In the planning and budgeting, as I said, this is really all about becoming more agile, being able to do those continuous forecasts, and doing it in hopefully an application that's really easy to use, simple to deploy, and fully integrated with your financials, which we have within the financial performance application. One way to look at Bank BI, therefore, is as a platform, a financial performance analytics platform. And by plugging into extracts from your core systems like general ledger, core banking, loan origination, and any other loan systems, we can consolidate that data into our platform. We can also plug into data warehouses. So if you are using a data warehouse, either your own in-house or maybe in one of the industry available warehouses, you could use those extracts could come from those data warehouses as an alternative route into the Bank BI application. And through that platform, that cloud-based delivery of the information, we can support the needs of CFOs, CEOs, boards, through to operations, risk, lending, and branch management. So they can really get to a single version of the financial truth for all stakeholders, taking into account things like syndications and participations, so that the loans we're analysing maybe in risk and lending actually do reconcile to the balance sheet and to the financial statements of the credit union. Now, as Bank BI, we have been operating for just over 10 years. And back in 2019, CUNA Mutual, as it was then, TrueStage, as they are now, TrueStage Ventures, made an investment in Bank BI. And so we are part of the TrueStage Ventures fintech portfolio. And if you were to go to TrueStage's website, you'd see Bank BI in there. I think we were the first non-US fintech that TrueStage invested in. So we're very proud to be part of that fintech platform. And we do operate, though, across very many countries in the world. We have over 80 customers now in 40 countries. More than 45 of those customers are credit unions. So by far the largest segment that we operate in is the credit union space. And most of those 45 credit unions are in Canada, the United States, and in the Caribbean. So a very heavy concentration in the North American and Caribbean market. We do have a lot of referenceability. As I say, we do have integration to pretty much all of the major core systems. One particular case study is on our website, which is available, and that's Ideal Credit Union in Minneapolis. Ideal have been a customer of ours for over 6 years now. They actually started their journey on Ultra Data and then moved to Prologue and DNA. And they fully utilize us for their daily financial reporting, month-end reporting, and closing at month-end. Dennis Bauer, the CFO, is always available and willing to talk to anybody interested in our product. And so if anybody does wish to speak to Dennis at any point in in the process, we're more than happy to connect you for that conversation. So let's start taking a look at the application itself. And what you'll notice with Bank BI is that it is a pre-built application in the sense that we've built out a lot of reports and dashboards that are ready to use out of the box. So the key kind of capability here is to map your chart of accounts into our product. So what makes every credit union unique is their chart of account numbering that they've deployed within their GL, and the loans and deposits and coding of those loans and deposits they deployed within their core banking system. So whilst there is a lot of similarity between the credit union balance sheets, there can be different terminology, different product lines. We will map your products, your chart of accounts into our application, and that's a key differentiator. We're not forcing a standard balance sheet or income statement on you. We're not taking the call report version. We're actually reflecting what you currently report within your management reporting today. Once we've done that chart of account mapping, then all of our reports, whether it's daily dashboards, daily balance sheets, financial results, key ratios that we might see in performance ratios, or as I said, whether it's balance sheet reports or income statements, they would all reflect your chart of accounts rolled into the product. On implementation, we typically take 3 to 5 years history into the application. So the starting point from a financial reporting perspective is to have obviously the current year, previous 3 to 5 years, as well as the current budget for the current financial year. So let's just exit the PowerPoint here, and we'll jump into a bit of a demonstration of the application. So what you're seeing on the screen here is my browser opened in our demonstration system. A little bit of things you can do here, depending on your screen size. You can move the menu out of the way just by toggling the button here. You can export data very easily by the click of a button over here on the right-hand side. And where you have reports, like I've landed here on the daily balance sheet, you can compress and expand these reports very easily. So you can do it at the macro level, all the way down through your hierarchy, or you can do it at an individual level and drill down. So I want to break down my loans into different product types, down into various divisions. I can then eventually get down to the individual general ledger accounts at the lowest level. So this is the balances coming in every day. And you can see here we have daily movement. We can see the change here. We can see an up-down arrow, red for negative, green for positive change, or change positive in the sense of financial impact. And then the variance chart shown here as well. Over on the middle here, we've got the monthly change. So latest month end against previous month end, we've got the budget variance. And over on the right-hand side, we've got the change from last year. We are bringing data in every day. So there are other reports that could just show you the whole month daily balances. You could look at the movement between the GL accounts, not just the balances. And you can also look at the actual balance as well as the average balance. So we calculate average balances based on the daily balances being fed into the application. And that allows us to not only show the average balance from a balance sheet perspective, but also any ratio could be based over an average balance. So when we're looking at things like return on assets, we could look on return on actual assets, return on average assets, and that return and average could be monthly, quarterly, or year to date. If I do want to export this out into Excel, as I said, very easy to do that. I can just drill down to the level of detail that I want, press the export button, and depending on your browser, it will appear and you can just click on it or push it down into your downloads folder. And then that whole, in this case, balance sheet is pushed out into Excel. So if I want to get more granular than I'm seeing here, I can just expand the levels that I want all the way out fully if I want, and then I can just hit the re-export. So whatever I'm seeing on the screen is what is going to be exported for me into my Excel spreadsheet. As I said, that's one way to get data out, to push it out into an Excel spreadsheet directly from the application. The other way, as I'll show a little bit later, is we can create multi-page pre-formatted reports, either in Excel or PDF format. Now, to get this data mapped into a chart of accounts like this does require us, obviously, to do that chart of account mapping that I talked about earlier. And so there is part of our admin system where we're able to do that chart of account mapping. And so this is a very powerful tool that lets us firstly build in this case, the balance sheet hierarchy that we want here on the left-hand side. And then having built that hierarchy, what we can do is drag and drop GL accounts into that hierarchy so that we can get the appropriate accounts into the appropriate product lines. And then by selecting a particular month-end balances, we can bring the data through and we can see whether we reconcile, whether our assets equals our liabilities plus equity, is with the P&L year to date plugged into our equity retained earnings. And so we can see precisely where we're in balance or if we're out of balance. So this one-time mapping is done by Bank BI to reflect your chart of accounts, and we load your history, we reconcile it to your management accounts. So the first time a credit union would see the application is actually to come into the reporting and be able to look at the reports with all of the data loaded. So the typical implementation of Bank BI is a relatively straightforward process. We're building the chart of accounts, we're loading the data, we're then asking you to verify this chart of accounts, to look at the monthly data that we brought in and to ensure that that reconciles to what you would expect. In doing that, we then built the trends that we need to see within the application. So if we look in this report here, we are seeing our loan portfolio broken down by business line. We can click on those business lines. So here's my mortgage loans. The blue line is my actual, the black is my budget. And so what this allows me to do is track for the last 12 months progress against budget. And we can do this at any individual level. So we could do it at the loan level just by collapsing loans. So this is our loan portfolio growth for the last 12 months against budget. If I wanted to drill down through mortgages to, let's say, fixed rate first mortgages, I can actually click and see fixed rate first mortgages. So this allows me to drill down to lowest sort of level within the application. So a lot of capability then to analyze the balance sheet. We could, for example, look at deposits. We can look at deposits from the various deposit categories, how they're tracking monthly, how they compare to this time last year. If we're looking at particular accounts, whether they're trending up or trending down, whether we're seeing money move across the balance sheet or new money coming in. And so this gives us this opportunity to see in a simple grid the monthly trend a year ago and then year to date averages as well, and the change in year to date. Down below here, we've got a chart that is showing each of those product lines compared to the previous year. So the blue is this year, the black is last year. So we can visually see very easily which ones are growing against previous year. Same is available on the asset composition. Where have we deployed our interest earning assets? How's that compared this year to last year? And how we can see that very easily. Inside of our income statement, we've got income statement, both monthly, quarterly, and year to date. We've also got some productivity analysis. So by uploading FTE, full-time employee numbers into the application, using a simple template on a monthly basis, we can track things like assets per head, loans per head, income per head, cost per head, efficiency ratio. And we can also track, for example, that graphically against previous 12 months. All of the financials feed up into what we call performance ratios. So once we've mapped in the chart of accounts in the financials, and we've got the balance sheet, the income statement, and the history, we can, of course, then calculate out literally hundreds of financial ratios and put them into dashboards. So here we're seeing a performance ratio dashboard. If I move down to the middle here, we can see our return on assets for the month. Over here, we can see the year-to-date return on assets. Over on the right-hand side, we can see our return on assets tracking against our budget for ROA for the year. We can change the comparison, so we can move from a month-on-month comparison to a budget comparison just by changing the filter. So here we can see our ROA significantly up against budget. And if I click on this, what we'll do is it will drill into what we call the key performance indicator tree analysis. So I'll just move this menu out of the way, make this a little bit bigger. You can see the tile here is green because our return on assets is above budget, which is why we're green and the arrow's up. And I can then drill into that return on assets. So I know we're up, but it doesn't tell me why. It could be, income is up. It could be expenses are down. It could be a mixture of all of those things. What is it that's driving our over budget ROA calculation? So return on assets is our return, our profit annualized over our average assets. We can see the average asset tile is red, indicating that whilst profit is up, ROA is up, our actual assets are slightly below budget. And if I drill into my assets, I can see instantly that both investments and loans are down. We have this slightly downward sloping arrow, which means it's less than 10% down. And if I drill into this, I can see, well, not all loans are down. It's mortgages and consumer, but commercial is up. And if I drill into these, I can see which particular loan products are up or down. And if I drill into those, I can keep going down through the chart of account hierarchy. So we have the ability to compare to budget in terms of drilling through the balance sheet. I can also do the same on my net income side. So my net income is up, green, despite some categories being in the red, extraordinary expense, but I can see my net income is slightly green, despite fees and charges being below budget. Is it all fees and charges? No, it looks like checking fees are up, all the others are down. If I move into my net interest income, I can see we're up on our net interest income, despite our interest expense, our cost of funds being higher than we had budgeted for. And as I move through my interest income, so I can start looking very green on investments because our investment income is up significantly, slightly green on interest income, despite consumer loan interest income being below budget. So again, we have the ability to walk through the chart of accounts, seeing which lines are up or down against budget. So that's on the income side. Obviously, I could go down to my non-interest expense as well. And to look at occupancy, compensation, I can see compensations over budget, but it's not salaries, it's not payroll taxes, it's benefits. So if I wanted to see which benefits, I could drill through to see which benefits. If I wanted to take a snapshot of this to use in a presentation, there is a button here I can press to download it, and the system will take a picture in effect of that and then give me the opportunity to open that decomposition tree in a desktop tool, and I can obviously cut and paste this and use this in any way I want to on my desktop. If I wanted to recalibrate this is comparing against budget, but maybe I wanted to compare this year versus this time last year on ROA, I could just change the filter. Now the system will redraw the tree based on that comparison. So we can immediately see our ROA is red, which means this time this year, which is February, we are not as profitable as we were this time last year. And so this gives us ability to change very easily, very quickly, those different views, in this case, flipping from a year-on-year view to a year versus budget view. Now, all of this financial reporting moves and ends up inside of management reports. So one of the things we can do is give the ability to actually view management report packs in the application. So once you close your management report pack, what you can do is you get instantly access to a multi-page PDF or multi-page Excel file. So in this example here, we have a 32-page management report. We have a cover page. Obviously, this could be the credit union's logo and color scheme. And as we move through the report, we can see a contents page dynamically created based on the analytics and the reporting that you pick from the application. So you have the ability to nominate which pages, whether they're performance ratios, dashboards, whether they're charts, whether they're balance sheets or income statements. You can bring those reports into the pack in any way in order you want. You can rename the pages as well. And you can also bring in loan and deposit analysis. So you're not limited to just GL financial reporting. You could, for example, bring in a breakdown of new loan in the month or new deposits by branch, by product, by loan officer, even into these types of reports. So as we move through the reports, you'll see a sort of pixel perfect representation of the reports that you see in the web application here in a PDF format. And so what we're able to do is instantly get this out of the box once you've closed your financials. So a lot of credit unions use this to automate the board reporting. If you did want to control the look and the feel of the board report and not use the Bank BI visualizations as your board management reporting, one reason you would is that you can then use the application to complement the management reporting. But if you wanted to, you continue to use your own board reporting, you can push the data out into other Excel files as a complete data worksheet and connect that data into your own board report, so that rather than having to do that manually, you can effectively encapsulate your Excel file inside of our application, have the data pushed into the application so that you can achieve that level of automation, even if you're managing the visualization of the data itself. So this is our financial performance application. Everything in here is related to the general ledger balances coming in on a daily basis. We get a restatement every day of the prior month end. So this allows us to capture any post-month end adjustments. And then what we can do is move across into our banking performance application. So this is where we take a snapshot of all loan and deposit information out on a daily basis. So first thing in the morning, we can come in, look at the latest position. I've landed here in the middle of this loan section on a branch loan analysis report. And you can see here, I can immediately see that this month to date, and we're sitting at the end of the month, but this would update every single day in the month. We have done 408 new loans for just over $21.5 million of an average loan size and a weighted average rate of just over 4%. This has added the 408 loans to our total loan portfolio of just over 26,000 for 849 million, of which 1,427 or 32 million is actually in the past due category. And we can analyze that past due category by past due day band or by other criteria in other locations. So if I drill down on this 408, what I can see is where have those 408 loans been dispersed? And I can immediately see 21 here in our North branch. If I drill into North branch, I can see Officer 11 has dispersed two loans connected to Officer 11, and they're both consumer loans, which is added to 45 on his or her portfolio, two of which over here are past due. As well as those 45 consumer loans, there's three real estate loans connected to that loan officer as well. Typically, you'd have the loan officer name in here. We depersonalize this information, but this would obviously, depending on whether it's an employee number or name, you can have that and see that here. It's very easy to change the orientation here. This is looking at a branch loan officer product-centric view. We can see that in this filter up here. If I wanted to take, let's say, a product-centric view, I just change the grouping parameter here, and the system will rerun the report, this time regrouping it into a product-centric view first. So that 408 loans breaks down across these different areas, and then I can drill into maybe a branch view, and then I can drill into a loan officer view as required. The system is fully branch filterable or selectable, so you can create your own filters. You can save those filters, so you can create, in effect, filter states that you can store within the application. So let's supposing, for example, that I wanted to create a commercial view of my portfolio. I could click on the commercial. I could look just now at my commercial loans. I could decide that that's a view that I want to keep permanently. I can therefore click on this icon over here. I could give this the commercial loan title. I can share this with my colleagues or create it privately for myself. And so having done that, you'll see that that particular view now is in my stored in my available views are here at the top. If I wanted to make that my default, I can just click this little star button here. That means whenever this report is run, it will default now to this commercial view. I can even promote this using this icon here to what we call my report section. And so rather than giving users a very big long list of reports, what users can do is create their own concatenated list, in effect a shortcut of my report. So you can see here, I've now added that branch view into my report. And because I set that commercial loan as my default, it's already remembered that. But if I wanted to change it and add some others, I could still do that and rerun them or save them as different views. So very easy to give, allow users to create a streamlined view to create a one-stop page for their reports that they want to see from the application. Now, if I navigate around the menu a little bit, we can see we have exactly the same capability to analyze deposits. We can look at new lending this month. We can look from it from a year-on-year perspective. We can look at branch scorecards, loan scorecards, loan officer scorecards. And we also have some risk views looking at the data by credit rating, maturity, concentration. We have some line of credit reporting and utilization of lines of credit. We also have the ability to track and look at member retention, those opportunity lists that I talked about. So let's take a quick look at one of these maturity insights. So this is drilling down to member level to look at deposits maturing in the next N days. So here you can see I have a report that's showing me deposits maturing in the next 7 days. And I can see by branch here where those deposits are sitting. So the majority are in this first branch. And I can see down below here in the grid, 55 deposits maturing in the next 7 days. And I can see for the dollar value and also a maximum balance. So here I can see that 174,000 balance. I might want to know who that member is. It's one of these 40 accounts here. I can click and drill through. And in the Bank BI application, we do not hold any personally identifiable information about your members. So no names and addresses or telephone numbers. Where we have a member ID or an account ID, we receive it encrypted looking something like this. But because the credit union has the control of the encryption process, you would know a password which you could enter to decrypt these values back to get to the clear text member ID, which you can then look up within your core system. And so here we can see that 174,000. And what we can do then is now download this list of 40 deposits. And in that download list, we'd have things like start date, maturity date, the product, the branch, the relationship manager, the member, which you can decrypt. So this decryption is only happening in the browser on your device or your desktop. Is not something that we see or can retain within the application. Looking at maybe credit score, credit rating. So again, just highlighting another way of looking at the loan portfolio. Here we're looking at it through credit score ranges. This is our total portfolio. Over on the right-hand side, this is new lending this month, analysed by those same credit score ranges. Down below that, we can bring in individual product lines and analyse them in the same way. If we were looking to track member growth, for example, so maybe you've got a particular strategy around a product set or a member demographic, we could use something like this member growth insight. So here we see our deposit accounts, and what we're doing, if I just filter this on deposits, we are looking at our deposit accounts, how many members we had. We're looking at it from the start of the year or the end of the year to month to date or year to date. So the first 2 months of 2022 in this demonstration system. So we're seeing how many accounts we have, what balances we have, and then over on the right hand side we can see in each of these categories what is the growth. And it looks like pretty much we're down as a number of members perspective, but we're up overall just under 0.5% in terms of actually the balances. If I wanted to change that perspective, say, okay, I can see we've grown the balances, but across what age demographic, for example, we can just change the grouping to look at it by age band. And now we can see that that growth come through being now analyzed by different age bands. So if we are targeting different products or different age bands, or we want to track the growth, we can see that, selecting a start date and an end date and comparing between those two periods. So this is all banking performance driven from, as I said, an overnight extract of loan and deposit data fed into a whole series of pre-built reports and dashboards. We do have a power user capability as well. So this gives you more of a capability like a pivot table, pivot chart to slice and dice the data in ways that you want to. So for example, I'm looking at my loan portfolio here. I could actually say, well, I really want to bring in the last 3 months worth of data. And what I'd like to do, and you can see here, December, January, February, and what I'd like to do is look at it by branch and then maybe by loan officer. And what I'm going to do is break the columns into product class. So we can see here for December, commercial loans, consumer. I could move product class down here and do it as a hierarchy down here. I could move, branch out and do the whole report by loan officer. So now I'm looking at it by loan officer, or I could drag loan officer underneath. So really I can mix and match this reporting in any way I want to. And again, I can save these views, come back at the later date, run the view, and see the chart or the graph that is based on that. So as well as pre-built reports, you've also got the ability to slice and dice the data in different ways that you might want to. So let me just move back into the PowerPoint and talk about planning and budgeting and profitability. So as I mentioned to you, we're bringing out 2 new applications this year. One is our planning, budgeting and forecasting application. And in this application, we really can handle 3 different types of plan, budget or forecast. So whether you're doing a multi-year higher level strategic plan, whether you're building out your operating budgets for the next 12 months, or whether you want to be in that continuous forecasting capability, the application will support those needs for all of those different scenarios. So what's the difference between a strategic plan and maybe an operating budget? A strategic plan might be taking the consolidated balance sheet, income statement of the credit union and working at a slightly higher level within the loan portfolio, slightly higher assumptions within OPEX without getting into a lot of detail. You might just forecast, for example, a growth in OPEX of 5%, 7%, etc. You might forecast a growth in the loan portfolio and the yield on that portfolio. Whereas in the operating budget, you can go down to a branch level, you can go down to itemize within OPEX and CAPEX, and at the product level, all the different assumptions to build up the operating budget. So the idea is that you can create a top-down strategic plan and your bottom-up operating budget can meet that strategic plan. So a key part of that processing or budgeting cycle is, are we meeting the strategic plan objectives that we set in that 2 to 3 to 5 year strategic plan? Once we have our budget, we can then copy it and keep moving the actuals into that model so that we can completely separately from our budget process that we lock away at the beginning of the year, we can now move the actuals into the forecast and we can reforecast. And we can reforecast based on changing interest rates, changed on product pricing, or changed assumptions on business volumes. So what we've done in Bank BI is really analyze the budgeting process from a series of what we call drivers. And those budget drivers allow you to navigate across the balance sheet and income statement. So if you started in loans, you'd start with your current contracts on the loan portfolio and play those forward, look at the cash flow from those. You then put on top of that new volumes that you anticipate dispersing, and based on interest rates that you forecast for the coming year. That would play into your balance sheet. It would also play into your interest revenue. You do the same across your savings and deposits. That would play into your interest expense. You would navigate across your OPEX, putting in those assumptions, your non-interest income, and also your CapEx, fixed asset expenditure. All of these drivers play into your current financials at the end of the year, and they obviously create movements in and out of cash based on what those drivers are. And so we have a full cash flow engine that is tracking cash as it moves in and out of cash based on those individual drivers. So let's take a look at what it actually looks like. Firstly, system very easy to use. It's browser based. Everything you need to do you can access from one control menu. So whether you're looking to set up rates for configuration, you can find those within the page. Whether you want to report in thousands or millions, you can easily change that. And if you wanted to create a report and run a report in real time, you can just navigate to that report, click on it, run it, open it on a tab. You can have multiple tabs on multiple windows open simultaneously. So what this allows us to do is, for example, have a control report like this open, which is essentially showing us a snapshot of balance sheet and income statement and financial ratios. We're comparing our budget for 2024. So let's assume we're at the end of 2023 doing a 24 budget. We now can look back at our December 23 position. How does the budget compare to how we closed the financial year last year? What's the growth? What's the ROA compared to that? And this is where over here we can compare it against a strategic plan. So if we've already built a strategic plan for next year, we can now see whether things like our ROA, ROE are actually in line with that strategic plan, what the variance is between the budget and the strategic plan. Now, also, you might set or will have set policy limits in terms of maybe concentration limits. You'll have regulatory limits in terms of loan to asset ratios and things like that. So over on the right-hand side, we can also compare the budget against any of those internal or external policy limits as well. So this allows us to have reports on balance sheet and income statement and performance ratios open whilst we do budget input. And doing budget input is a case of navigating across the balance sheet or the income statement to a product line or an OPEX category, and then selecting a driver that you want to use within the budgeting application. So by way of an example, I've picked our commercial loan driver here. And for all of our drivers, the system gives us three tabs. It shows us what happened last year. It allows us to capture what we expect to happen next year in the budget, 2024. And we also can show what is the results of those that budget for 24 in terms of accounting entries. How have those budget assumptions impacted our accounting, both in terms of balance sheet, income statement, and cash? So we are sitting at December 23 doing a budget for 24. We're looking back at last year, which is what this window tab is giving us. So everything here is what happened last year. It's giving us a complete breakdown of how we opened in this for this particular fixed commercial mortgage, commercial loan, what the opening balance was, what the principal repayments were last year, month by month, what the new loans were that we dispersed in the month, and how we closed the month in terms of our balance sheet on this particular commercial of fixed loan. Similarly, we have an analysis of the interest rates. How did we open? What was the weighted average rate of the loans on the portfolio? What was the weighted average rate of the loans that we added to the portfolio? And what was the average rate of the closing portfolio? Similarly, how many loans did we go into that month with? How many matured and how many did we disperse? and what was the loan growth overall for this particular portfolio. So this gives us stability, whether it's loans, deposits, OPEX or CAPEX, every balance sheet or income statement line or item at whatever category level, we can look back at previous year to see that history. We can then move forward into the 24 budget, and in a similar way, we can play forward our loans that are on our balance sheet at the end of the year, and then we can calculate the principal repayment based on the principal and interest frequency. We can see new loans dispersed based on the assumptions we're going to key in terms of new loans, and we can see the closing balance. Similarly, we can see the three rates. How did we open? What interest rates on the opening portfolio? What interest rate did we add in terms of the new loans, and how did we close average? And similarly, how many loans did we go into the period? How many matured, and how many did we add? And here this is where we would add our new loan assumptions. How many loans each month are we dispersing for what average balance? And what the system would do is look up this particular product in a separate product rates hierarchy table, which is linked to a base rate, which is where we would get our estimations of our pricing for 2024. And so by connecting every product, whether it's fixed or variable, to an underlying product rate linked to a base rate, this allows us to effectively model in the forecast changes in base rates simply by changing base rates, which can ripple through to pricing, which can therefore change interest income and expense within the budget or the forecast. Once we've captured that budget, we can then hit the accounting tab, and we can see here movement in the balance sheet lines, interest income, and also the cash flow for repayments and loan disbursements. And then down below, we can see how the declining balance was looking over the 12 months, and how the new business adds into that to maintain the balance of the balance sheet going forward, and whether there's any growth in the year. So with the continuous forecasting, what we can then do is take a copy of that budget, and as we move through the financial year, so we can replace the budget with the actuals, and then in the reforecast, you can determine how much of the budget is still applicable going forward. So are the business assumptions, the volumes the same? Are they right? Is the pricing correct? Do we want to change the pricing? Have base rates changed? Has the Fed changed the rate? In which case, do we want to make that change? Or do we just want to simulate those rate changes and see what impact they have? So we can not only do a reforecast, but we can also do a simulation, and we can make as many copies of this and do as many of those simulations as we want to. So hopefully you can see through the kind of ease of use and the budget structure, we really trying to make planning, budgeting and forecasting an easy to use application. We can improve the efficiency in the use of it. We can create automated integration. We can support multi-year, 12-month and rolling forecasts. And we can also support those different scenarios, whether that's around interest rate, product pricing or business volumes. And that's really going to give the credit unions greater control over their profitability, cost control, as well as obviously general efficiency around the whole planning, budgeting and forecasting process. If we now jump into our profit analyzer module, this is, as I said, where we will be using or are using a funds transfer pricing methodology to calculate member profitability. And one of the problems that many credit unions face is they may have branches, as in this example here, that are basically long in expenses and long in deposits, and therefore interest expense is higher than interest revenue. So as you can see in this example here, there's more savings and deposits in this branch than loans. And by the time you add in operating expenses, there's a net loss in this branch. And so obviously that at one level looks like this is a loss-making branch, but obviously in reality, those those savings and deposits are bringing liquidity into the credit union, which is obviously funding loans on the other side of the balance sheet. So by bringing in what we call a notional treasury function within the Bank BI application, what this allows us to do is effectively take all of those loans at a member account level look up an appropriate cost of funds rate in a yield curve to that product, and calculate a net interest margin. So at a very simple level, if the member is paying 5%, the cost of funds is 4%, we're calculating a 1% margin on that particular loan. Similarly, and we're doing that calculation, as I said, by a series of cost of funds rates linked to base rates. Those cost of funds rates could have a liquidity premium, a risk premium, and you can make those rates as granular as you want to within your product hierarchy. For deposits, it's kind of the reverse process. We're giving, obviously, the member a member rate for that savings or that fixed deposit. That we're then reselling that internally, notionally, and giving it a worth of funds. So in this example, member receives 1%, we're selling internally for 2%, we're therefore making a 1% margin on those savings or deposits. To get to profitability, we obviously need a couple of other components. We need to allocate costs back to members and members' accounts. We also need to accumulate and allocate the non-interest income, the fees and charges at an account and member level. Once we've done that, we've got the ability to look at that net interest margin across all of the members' products, regardless of whether they're on cards, loans, deposits. We can roll up non-interest income at the account and member level, and we can allocate costs back against those members as well. This allows us, therefore, to roll up profitability by customer, by product, by branch, by account, and by credit, industry, any other member segment. So this allows us then to, for example, look at member profitability. Is it true that 80% of your profit is driven by 20% of your members? This is a decile breakdown of your profit. You can drill through this to see who are these top 10% members driving this amount of profit. Similarly, you could look at profit by a different view of product profit, whether that's loans or deposits, or a different view of branch profitability based on that net interest margin. And then ultimately look at that by credit score or by age demographic to see profitability. So in terms of piecing this together with your current capabilities or systems, if you don't have member profitability, what you have in your accounting system is all of your loans, for example, all of those balances on the balance sheet with interest rates, and you have that interest at a gross level the member's paying flowing into your income statement. What Bank BI is doing then is calculating this cost of funds and deducting it from this interest. Obviously, all of this is happening inside of the Bank BI module. We're not touching your financials in any way, and we're calculating out then an interest margin to which we can then add in non-interest income like fees to get to a gross profit, and then against which we can deduct our costs, which gives us a net profit capability, and hence the ability to then roll that profit up in all the different ways that I showed. So hopefully I've demonstrated in this webinar that we've got integration to your cores. We're available out of the box. There's no additional hardware software you need to invest in to take the Bank BI solution. We have a very simple commercial model. It's a fixed fee implementation fee, one-time fixed fee to do all of the setup, and then a simple annual subscription to run the system every day and have access to that system. We monitor and maintain that system continuously through that subscription, and everything is configured to your chart of accounts, hosted in the United States, and typically projects are delivered within a 3 to 4 months timeframe. And you can access this data any device, anywhere, anytime, whether you're in an office, at home, at a conference, 30,000 feet, over breakfast, whatever the scenario, you can get access to the information anytime and anywhere. Now, I did mention that we have a free-to-use peer analysis system, and in this peer analysis system, we have all of the NCUA call report data pulled in against a whole suite of predetermined reports. So you can look at, net worth ratio, for example, over here against your peer group, and you can also run reports or download the report pack from within the application. So if you are interested in that, please find your way over to bankbi.com/peer, and there you'll find not only your credit union, but any other credit union you want to look at, information and as I said, PDF pack. And again, you just register, we give you access, your email becomes your user ID, and you get straight into the application, no software to install, and it's completely free to use. So we've come up on time. Just invite you, if you do have any questions and answers. I've run out of time here today. I haven't seen any hands raised or questions in the chat, but if you do have any questions, then feel free to reach out to me. I'm graham.goebel@bankbi.com. Thank you very much for your time today. It was great to have you here. I hope you found something of interest, and we look forward to speaking with you sometime in the near future. Thank you very much indeed.